Hello, everybody. Chris Martinson here, and today we're going to be talking about finance and economics as part of Finance U. Remember, anything that you see in this video and all resources available at our websites or affiliated websites are not intended as or construed as financial advice. This is for educational purposes. Remember, if you have a financial decision, please consult a financial professional. We are not attorneys, we're not CPAs, we are not financial managers. As well, we do our best to be accurate, and everything we represent is as accurate as we know it to be. Now, let's turn to our program.
In certain states, it's what, 200,000, 224,000 is the income that's needed now for a family of four to live the average American lifestyle, a comfortable lifestyle. But inflation's not a problem. The economy's so great, right?
Well, hello, everyone, and welcome to this Finance U. I'm Chris Martinson, your host here with Paul Kiker again of Kiker Wealth Management. Hey, Paul, how you doing?
Doing good, Chris. Good day to you.
Well, good day. I got this smile on because, as you know, I'm cranky today because there's so much misinformation flying around. I get annoyed, Paul, when they put out their inflation readings because I know at heart we have to parse them. And does this mean that? Or will the Fed be cutting sooner or more? And all of that. But the numbers themselves, once you understand, if you peel back and look at how that sausage is made, these are some disgusting numbers. They bear no resemblance to people's actual reality. So it's kind of, we're discussing something fraudulent in a legitimate way. And it just always bothers me a little bit. But let's discuss these fraudulent numbers, shall we?
Yes, let's do. And along that line, but Chris, you just don't realize the reality of how great the economy is, right? Your expectations are wrong, or at least that's what they're telling us, right?
Yeah, no, we were told this directly. We were told in a number of ways that like these people, I think it was what was that CNN guy said he's very disappointed because Americans don't seem to appreciate what a great economy Biden has given them. It was the bald guy, Stelter or whatever his name is. But anyway, yeah, we're just not appreciating it. In fact, let's talk about that lack of appreciation because I notice here, these people here, let me see, I'll pull this up. Yeah, these people are very much not, I don't know. It just doesn't seem right, Paul, that 2/3 of middle-class Americans don't appreciate the great economy they're living in and say instead that they are struggling financially, gasping for air. It comes to us from June 7th here. And it says a majority of middle-class Americans are experiencing financial hardship that they expect will continue for the rest of their lives. So low expectations, according to a poll, findings published by the National True Cost of Living Coalition, I like the sound of these people already, show that 65% of Americans whose incomes are 200% above the national poverty line, which is about $62,300 for a family of four, often considered middle class, said they are struggling financially. Well, $63,500 for a family of four. You can't even afford a 3-bedroom house anywhere that I'm. Of course, you're struggling.
Yeah, absolutely. And 200% of that, what's 124, 125,000 is what they're saying just to, and I wish I could find the data real quick here. I don't know where I stored it, but it came out and said it in certain states, it's what, 200,000, 224,000 is the income that's needed now for a family of four to live the average American lifestyle, a comfortable lifestyle. But inflation is not a problem. The economy is so great, right?
No, inflation's doing really good, really good.
Yeah.
It's come way down.
So
Yeah.
yeah, and they have to move from the CPI to the core CPI, which removes the quote volatile food and energy prices, which food prices are volatile, all right. They're a rocket ship higher. And then now we get down to the super core, which removes food and energy, and then also removes shelter and rent costs, because the Fed believes that by removing that house prices increases and rental increases are temporary. Well, tell that to the people that have gone out and mortgaged themselves to the hilt to buy rental property. If rental prices goes down, what kind of damage that's going to do to them? So,
well, these would be temporary if the Fed would stop meddling and keep, and every time prices look like they're going to start to moderate, the Fed freaks out, finds a reason to pour more money. They call it quantitative easing, Operation Twist, whatever. And they just dump more money into the market because the Fed is desperately afraid of financial asset prices going down. And that would include real estate. They don't like it. They've said it. I mean, flat out, they have papers that we want the price of these things to go up, but they never think, Paul, about the impact that has on the generation that's coming along. I would personally, if I was young, I want the stock market to crater 50% because I'd rather start from a lower basis and build my way. But the Fed said, nope, this is of, by, and for the boomers. We have to make sure that their experience in life is just nothing but a one-way Ponzi style, Bernie Madoff 45-degree ramp up and to the right, you know?
Yeah. Please don't let this fall apart on our watch. Please don't let this fall apart on our watch. That's what, you know, it really boils down to that, it seems, with the desperation here.
Yeah. But, you know, all of that said, you know, what happened as a consequence of that. So this is a live chart coming out from, you know, this is probably about a 15-minute delay. Of course, the VIX got smashed. But look at this. It's stocks and bonds all going up. A little surprised to see the Dow slipping into the red here. But, you know, look at the NASDAQ and the Russell in particular, because these poor little struggling companies in the Russell making the small caps, they desperately need lower interest rates. And lower interest rates, of course, are going to make existing bonds more expensive. So they going up in price. But so this is what I call a Goldilocks moment where the Fed gets this, and you know, this is what did the whole thing right here. Core CPI came in at 0.2 versus 0.3 expected. That's the rocket fuel for all that green you see on here right now. It's pretty, big moves because of that one mostly fraudulent statistic right there. So I don't know. I just wish we could just get on with being honest to ourselves again. Would that be too much to ask, you know?
No, I wish we could too. And the problem with this is now, you know, when you look at it, let me see here what the data is. So far this year, well, let's go back to that. So the Fed's starting back to November has been in a panic per se to act like they wanted to cut rates. Now they've not done it so far, but now all of a sudden this data comes out and everybody on Wall Street across the board pretty much says this provides cover for the Fed to come out and cut rates probably starting in September, October, November. Now, I didn't get to read the whole press release, but it seemed initially that the FOMC statement came out and they removed some of the cuts from this year. So it's like they're kind of starting to take that punch bowl away a little bit. But the reality is with the data coming behind, they don't have to tell the market this because the market knows exactly what they're going to do the first chance that they get to cut rates. So, you know, that's crowded money away. So this year and the start and the belief that Fed's going to save the day, this has been the second highest equity inflows into global funds, only outpaced in 2021. So there's been an average of about 1.7 billion of inflows per day on the global stage. Now, what's interesting, global passive funds have seen a positive 374.5 billion of inflows, while active funds have seen a negative 184 billion in outflows. So the movement to passive, high market capitalization, high momentum, large caps, specifically USA. So I've talked in the past about the USA has been the only game in town since January 1st, 2008, has been the biggest, where value, small cap, cyclicals, and international have all seen outflows. So what's interesting, the indexing and the weakness of that and this passive flow, you know, forget about the efficient market hypothesis. Currently, if you allocate $100,000 into the SPY ETF, not a recommendation, just talking about the mechanics of it, $100,000 into the S&P 500 ETF, $31,000 of it goes into the top 6 companies, just by the way it's designed, because the larger companies carry a larger percentage of the weighting. So 31% of your funds go into Microsoft, Apple, Nvidia, Amazon, Alphabet, and Meta. So that's passive flows. I mean, there's no thought that goes into that. There's no, hey, are these overpriced? And that's crowding out funding for these other companies that really need it. So in a long-term standpoint, I mean, I know the funds are going there, but really, it's not necessarily crowding out funding, but to an extent it is crowding out funding because they're getting the larger shares. 31 cents on every dollar that goes into those companies without thinking, without paying attention to fundamentals, how expensive the individual stocks are. And, and that really sets up this kind of panic chase that's taking place right now. So more and more, they're crowding us into a space that when things change, funds, because of that herd mentality and chasing return and just driving people into that category by bailing the markets out, are we going to have any reasonable and wise people left that are actually managing money? Or is it just going to be an index that once that thing cracks, it wipes out everybody that's exposed to it? That's my biggest concern with the path they're heading us down right now.
Well, my biggest concern is that, of course, there'll be this thing called the Great Taking, which will happen potentially.
Yes.
Just because all the rules have been written and rewritten and jiggered and rejiggered, and the raccoons got their little lawyerly fingers in there, and Paul, they've just done everything they can to disconnect us from our assets and sort of make it vague. And anyway, I feel like there's a crisis coming, and I just don't have a lot of faith that the people in charge even know what they're doing, right? I mean, remember like great financial crisis, Hank Paulson. I mean, he was a pretty commanding figure, smart guy. But even he had to just panic, come up with a 1.5-page memo, wade into Congress, close the doors, scream about the potential for martial law and fire and brimstone, walks out with $750 billion to try and start patching up his friends' balance sheets at Goldman, which had giant holes below the waterline. Can you imagine? And I don't want to scare you too much, and I apologize in advance. Janet Yellen in that same role.
I'm a deer in the headlights right now. Sorry, frozen with pain. No, that's absolutely terrifying. That really is, because it's clear as day that Paulson's mind moves a whole lot faster than hers does.
Yeah, I mean, I've watched way too many press conferences, and I'm just like struggling to how is this even possible that this is our Treasury Secretary at this moment? It's I've not maybe behind closed doors she is all that in a bag of rocks, 4D chess player, super sharp, and she's got this act, but I don't think so. That's how I read it so far. I think what you see is what you get there.
Yeah, that's unfortunate because it doesn't. In several positions in our very important leadership roles, their minds don't seem to move very fast or eloquently at all. And they don't necessarily have to be eloquent. I'm not worried about eloquent, but they're serious issues in some conversations that are being had in the halls of power. So yeah, that is concerning, but that's unfortunately the situation we find ourselves in, and no one has. The pain of changing has been postponed to the point that I'm concerned that we're down this path right now, that there's no way to bring things back to normal without major pain across the board. And fewer people are having the willingness and the courage to open their eyes and look at the reality of the situation and walk the path less traveled. Because the longer things go on, the more it causes people to be complacent, because you're aware, you pay attention. And really, if you manage money through 2008, to an extent, in a period of time when we want to be in the fantasy world event to where we can paper things over in its plastic faces, you're handicapped to an extent, because with much wisdom comes much sorrow. And it's to the point now where active funds, the large majority of those active funds out there, their responsibility is to try to manage risk in the event that things come apart. Value funds, their focus, that's a Warren Buffett approach, right? He's at large values of cash. A large percentage of his portfolio was in cash, at least at his last reporting. It's highly unlikely that he's deployed a lot of those funds, because you have to pay attention to the basic fundamentals and what has stood the test of time in investing into companies based on numbers and outcome, not just pie in the sky sales pitch. So, well,
I'm so old school on this stuff. So I used to really do a lot of fundamental analysis, right? Because I believe in that. It's sort of, Warren Buffett style, not making myself the same as him, but I'm just saying same idea, right? I would actually get annual reports. I would look at them. I would pour through things. And now I don't even know how to do that because it was right around 2008 or 9. All of a sudden, Paul, this new thing came up called non-GAAP earnings, right? GAAP being generally accepted accounting procedures, right? And so it's just like not generally accepted accounting procedures, right? Not those things. And I didn't know what I was looking at anymore, right? What the heck is a non-GAAP earning? You know, it's whatever the heck management wants it to be, you know?
Wow.
And then you find out that the companies with the highest non-GAAP earnings reports typically had the highest paid CEOs through their compensation, which was linked to stocks. And so the whole thing's just, it really, I lost a lot of faith that our regulators were regulating, you know?
Well,
yeah.
if they really were, we would have had people actually go to jail after the 2008 financial crisis.
Lots of them.
In the 2000 bubble, when that burst, there were people that went to jail, but in 2008, there were not, which is still absolutely shocking to me. Now, on our local level, we actually had some individuals and officers of banks that actually went to jail. It happened on the local level with small banks, from what I understand, across the country, at least, but not on in the major firms or the too big to fails. And they were just as complicit into what took place during that period of time.
Sure. Yeah. No. I mean, we have a two-tiered system there. So this gets really. So let me ask you this then. So what is let's talk about why would the Fed want to cut? I'm old enough to now, Paul. I remember whole years went by when nobody even asked, like, is the Fed going to cut next or what? Like nobody, like, whole years went by where nothing happened with the Fed funds rate. Now it's like, you know, constant daily. And it's like the only thing markets and people seem to care about is let's guess what the Fed's going to do next in terms of cutting rates. So why would they cut? So this is the S&P 500. As you and I have mentioned, the financial conditions are just ridiculously easy right now, as easy as they've been since the height of the COVID, you know, crisis, if we can call it that. And this is nothing but a one-way ticket up. Like, we're at all-time highs. So on what basis? What are you hearing is the rationale for why we'd even need to? Why are we even talking about cuts? Like, what are we solving with a cut? What needs solving?
That's a good question. I cannot answer that question. I can speculate a little bit from the standpoint of if you look at debt levels on the consumer, credit card default rates are starting to rise. Credit card default rates, not credit card, but auto loan default rates are starting to rise. We're not seeing it in housing, but typically in the past, if you're going to cut rates, it's because asset prices have come down and you're going to try to hold a floor there. It doesn't make sense to me from a consumer perspective if you're trying to make sure that the consumer's okay, because if you slam rates back to zero and you cut them again right now, we've not dealt with the inflation that's in the system already, so inflation would reaccelerate again. I mean, the market seems to be giddy over, super core inflation, any justification that the Fed's going to come out and cut. So when I move from there, from what I hear around the edges, and I don't have the statistic in front of me, you'll probably remember it because I think you talked about it at some point here recently. Let's just say 30% of the Russell 2000 companies, if interest rates where they are at this level are not profitable. So I don't know if that statistic is correct or not. I knew that it was around 17% not too long ago, which is a relatively high number historically, but is it trying to save or bail out those companies that are already struggling? Because the Fed has incentivized corporations to maximize their leverage across the board, which is exactly what took down Silicon Valley Bank when that happened. So are they trying to set the expectation, hey guys, hang in there a little bit longer. As soon as inflation starts to settle down, we'll bail you out. And maybe that's keeping the credit markets going to where there's companies that are willing to continue to lend because they're like, hey, we can't pull the plug on these companies right now because we're going to have certain losses if we push these companies into bankruptcy. But if the Fed, cuts rates and gets us back down to half of where we are now, maybe these companies can survive through the other side of the cycle. That's the only thing that I can think of from what I'm hearing around the edges, because really none of it makes sense to me. What about you? What's your thought on the reason why they're so hungry to cut rates?
I think because they're just completely addicted to micromanaging that financial assets always have to go up and to the right. I believe Luke Gromen is correct that they need to, you either defend the dollar or you defend the bond market. Defending the dollar means if you don't defend the dollar, you let it slide, and that's inflation, right? We're all used to that. Inflation isn't the prices of things going up, it's the relative value of the dollar against things going down. So let's just make sure we got that right, because they always spin it the wrong way. Wow, the price of soap is up. Like, nope.
Right.
My $1 bill buys less soap this week than it did last week. My dollar's shrinking. The soap is the same, right? So, but I think the pressure on them, Paul, I honestly think that the problem for them is that the federal government now is starting to get in a real debt bind. So if they don't start cutting those rates and the federal government can't start, popping off 28-day paper, T-bills at something less than 5.4%, we're going to see that interest cost is going to eat things really bad at some point. And you saw, this was shocking to me, and I think there's a number of ways to analyze this, but the Team Biden in response to that said, oh, well, we can't cut spending. That would be terrible. I know. Let's propose taking capital gains taxes from 20% to 44.6%. Highest ever in the whole series. Worse than World War II. Highest ever. It's such an emergency. You know what the emergency is? We're sending $100 billion to Ukraine every week or whatever, it needs. Or, we're just spending money like crazy on stuff we don't need.
Right.
Just left, right, and center. Right? I don't know how much we're going to be spending on these illegal migrants, not immigrants, migrants, right? To parse those words carefully. But it's a lot. It's in the many, many tens of thousands per person that is being expended, and there's millions of them. It adds up, Paul.
It adds up a lot.
They said, let's cut capital gains tax. Let's make corporate income tax higher. Let's eliminate the 1031 transfer for real estate. Let's remove the depletion allowance on oil and gas, on and on and on. So they just proposed like these massive tax increases. Now, I don't know if they'll get them, but it was a weird thing in an election year. Very weird thing to have any of that stuff. Like, that's an odd thing.
You're right. In an election year, when it's supposed to be this close, as they say, and it's a contentious election, why would you risk letting something like that out? They don't do that in the past. They usually tell you what you want to hear, and then on the other side of the election, they're going to do what it is that they want to do. And so yeah, that's pretty interesting. It really is.
But I think they're going to have to cut rates or we get into a real interest debt cycle for the U.S. government that they can't get out of.
Well, and the worst part is, though, that's not going to solve the problems if we cut rates in the halls of power, because that's just going to fuel their willingness to spend and slosh money around the system across the board. So, it's a moral problem in the halls of power, and it's an integrity problem, and it's a short-term thinking problem and an instant gratification problem. It's not looking out to where we're going to be and making sure that we're good stewards. I say we as the political leaders for our citizens and the generations in the future. That there's no fear. I've spoken to a couple of people, spoke to an individual not too long ago. It's like, hey, I inherited the family business, and I just want to make sure that I can expand it and be as good a steward as what my father was before him. There's no concern about stewardship. It's, hey, I'm here, I'm smarter than you, I'm educated wherever, you should do exactly what we should do, because in theory we have things figured out, but we've never gotten our hands dirty and actually getting out there working in the reality of whether these theories are going to work or not.
Yeah, I'm with you on that. The abstractionists versus the reality people. Reality's going to make a comeback. You watch.
It will.
Hey, so how does this factor in? So we just had this big BRICS meeting, right? And so the BRICS said, they're in the final stages of completing its de-dollarization program. We saw that in Dubai, they lit up the tallest building, the Burj Khalifa, with the Russian, flag colors. It seemed really chummy. I saw that China and most of the Middle East and Russia really getting along pretty famously at this thing, and they're very clear about it. They said that what they want is they want to de-dollarize. They had all the right reasons you and I have discussed, right? It's been weaponized. It's not It's just not something they're interested in being a participant any longer. If that comes to pass, that they really gain some traction on that, and it's true, and I couldn't source this, everybody take this with a pinch of salt, but it was reported widely that Mohammed bin Salman chose not to re-sign the 50-year-old Kissinger agreement, which we would otherwise call the petrodollar agreement, and that was on June 9th. Didn't happen. So if it turns out that Saudi Arabia is backing away from the U.S. and turning towards China and is not going to use dollars, but will use something else instead, whatever that new thing turns out to be, I think that this could force the hand, because now it's not in the Fed's total control to cut rates or not.
Right.
It may well have to raise rates if it comes into a larger funding, a balance of payments problem. So we'll see how that plays out. What do you think about that?
Well, I think that's pretty interesting, because we had talked about the unit and all of the effort, and I'm still in the process of doing some research. As soon as we get through this weekend, I'll have some more information to share about what I've learned about the unit over the next couple of weeks, because I believe that's ridiculously important, especially when you get this announcement that they're continuing their plans. And it's a situation where I believe they're forced to, because of the behavior of the United States. Well, that does make things really interesting, because if you have something like the unit that they offer that has the ability to be widely purchased and allocated to, well, you don't have to trust them. They've got it set up within the system, especially if they have that 40% linking to gold, that now that you've got something trustworthy that's decentralized. Well, the US dollar is centralized. So you've got a centralized individual that's using their political power to weaponize our currency. And no longer do you have that barrier of integrity, that boundary that I'm not going to abuse my position of power. Mm-hmm. So they've set up something, apparently, if the unit is what it looks like it's going to be, and that's where they move to, you've got integrity built into that system. So it's the best of your kind of blockchain technology, as well as your decentralization. That's incredibly impactful for the U.S., and that may be game over as far as this slamming interest rates down to zero. Because of the fact that we will have to raise rates to draw capital competitively inside of the United States, or they're going to have to let the markets go, because where is U.S. money going to go if the markets start coming apart in the interim period? It's going to go to treasuries. So that does make this easy slide and easy game, hey, bright sky and fantasy land of how things are going to work out, a lot more challenging. And for U.S. investors, all of that money that's been flowing into U.S. markets because of momentum. That's what happens in the herd mentality. And this is why the bubble in late 1990s, the bubble in 1929, and what I think we're in the midst of the everything bubble, it's impossible to determine when it ends, because you're in uncharted territory. But the reason it's so impossible is it's pulling people off the sideline. They just can't take it anymore. In this situation where you're fighting tooth and nail to try to get through, and I'm having a conversation with one of my children right now. He's like, Dad, I'm making good money, and I mean really good money, and I just can't save it fast enough. The cost of everything's going up so fast. So they feel that desperation, and when the last person comes off the edges, that's when things tend to start coming apart. So, and then most people just think that it's going to be more of the same from their hindsight bias. So that's going to dramatically upend the global order if they're able to pull this off successfully. And the question is how hard are our U.S. politicians in the U.S. going to fight to maintain that power or equalize that power or keep that transition from taking place? But I didn't realize that about him not signing that on June the 6th or June the 9th. You said that to me is a pretty big deal.
Yeah, it was. I found the original. So here's the thing: I couldn't find the actual agreement. It's kind of hidden. Mm-hmm. But I do know, due to a New York Times article written on back, that it was on June 9th, 1974. That was the original signing. It was a big thing. Mm-hmm. Kissinger signed. One of the top representative for Saudi Arabia signed, and it was this whole thing. It was a nice hotel. I bet they had a nice dessert trolley off to the side. But we don't know what the deal actually was. We just know that it was described as the petrodollar deal, where Saudi Arabia is free to sell its oil in dollars, and we would help protect them. So on June 9th, so I pointed this out for my subscribers a while back, on June 9th, the Wall Street Journal ran an article that same day on June 9th, but it had nothing to do with that petrodollar deal. It said Biden, in the context of Israel, would love to get Saudi Arabia closer to Israel, so he offered a really, really big military package to Saudi Arabia as a carrot to dangle out there. Because of Israel, they are saying, I'm positive that's smokescreen. It was because this other one was expiring. And this caught me off guard because it got so little fanfare, but this bothered me. It was a mutual defense pact. It would in a treaty form obligate the United States to engage militarily if Saudi Arabia was attacked.
That's a huge commitment.
It's a big commitment.
That's a huge commitment. As volatile as the Middle East is, that doesn't make sense that you would commit us to that unless you're desperate to maintain that relationship and try to protect the petrodollar status. Because imagine this, if they've got, and I don't know, they don't state clearly what the other 60% is on the unit. It does say clearly that it's going to be a weighting of the currencies of those countries that are there. But if you go back to what they've talked about before, going back to 2010 when President Medvedev of Russia at the time, and they introduced that SDR, which was the special drawing right currency, which is basically the forerunner of what appears to be the unit. The unit just has newer technology and blockchain and decentralization inside of it. It's more of a digital network capability, which is quite fascinating. And but the rumor has always been that, hey, the countries that are going to be there, based on the natural resources that you have within that country, you'll be linked in. So could you imagine if Saudi Arabia comes in and says, hey, we're going to pledge our oil reserves and future unit and a future production in a manner similar to what we did with the petrodollar through that agreement there, then that's a major shift and gives even more credence to the unit if you're going to be able to exchange it for oil within that agreement.
Yeah.
And what does that do to the U.S. now?
Well, it's got to be shifting around because, what is Saudi Arabia? All it has to do is look off of its left coast into the Red Sea and find out that the United States apparently can't protect all that much. Like we're having trouble, if people haven't been tracking this, in the Red Sea because of the Houthi rebels lobbing missiles. We still can't get that situation under control at present. So here's the thing. Ships and boats, as magnificent as the technology on them may be, it's really old. It's still that's passé. We have these drones now. We have these anti-ship missiles. We've got hypersonics. The whole world has changed, and boats are basically looking for an excuse to sink, right? And so I don't think we can project power. That's not lost on the Saudis. Like, oh yeah, you're going to come to our aid? Yeah. How? You fly in here or you sail in here? Tell me, what are the particulars, right? Or are you going to pre-station a bunch of stuff here? So there's big geopolitical things happening right now. I think every investor has to be aware of them because these could really upend things at this stage.
And if I'm them and I'm thinking about it, like you said, okay, if we're going to be in an agreement where I'm going to rely upon you to protect me, I need to make sure you're efficient, you're powerful, and you've got the wherewithal to step up to the plate. So here you are, what is it? The $300 million is what, was it 100 million or 300 for the floating pier that has been an absolute disaster in the Middle East right now? I mean, seriously, we can't even display with today's technology. We're running in there. Oh, we're going to build this floating pier. We're going to commit American taxpayer dollars to it. And I think it was Dave Smith or somebody made the comment that it couldn't withstand 3-foot waves. And it's obviously not been able to fulfill the function that it was designed to do.
Who could have predicted 3-foot waves? Seriously.
in the middle of the ocean or sea that large? Yeah.
Yeah, but think about it. I mean, it's so emblematic, though. It's thanks for bringing that up because to me it's emblematic. I'm sure there was a really sweet PowerPoint presentation. I'm sure that 300 million was probably a low ball on what that pier cost, right? It goes with our $45,000 shovels and $18,000 nuts, that go with the $14,000 screws and all that, right? So But this is a really important point, because I do think people need to understand that it is a unipolar world. A lot has changed. My whole thinking changed completely because of the Ukraine war, where I watched Russia had a combined, their total military expenditure is $82 billion in the year prior to that adventure. I don't know what it is now, but still, we'll call it 80. The United States was 10 times larger than that. And NATO's was half again, so Russia's 80 billion was up against about $1.5 trillion, right? And we emptied our warehouses. M1 Abrams, Bradleys, Storm Shadows, Leopards, like everybody was throwing in what they had. And Russia just chewed it all up, chewed it up, right? Mm-hmm. So the asymmetry of that, Paul, just says everything changed. I know most people don't get it yet. We're the still most powerful military and all that rah-rah. But the truth of the matter is, it just changed. I feel like we're at that moment, like World War I. There was this French general, lost 600,000 very brave cuirassiers, the horsemen, right? Because he didn't figure out horses couldn't charge machine gun nests, just couldn't compute it, Mm-hmm. And I feel like I'm watching those same computational errors happening right now.
Well, it's that arrogance. And, what comes to mind is Jordan Peterson made the comment about the importance of truth. And I'm going to butcher this because I'm trying to pull it up to memory right now. But his point is tell the truth, or at least don't lie. And that's important. And he says the problem is, as he goes on from that, it says if you don't tell the truth and you live in a lie and you're lying, you're trying to control the world. You don't know the outcome. You think you know the answer. So he didn't say this, but I'm reading into the God complex, right? But what's important, he said, beyond that, is if you choose not to tell the truth, or at least not lie, once you start living that lie, it distorts your view of the entire world. So you cannot see anything for the truth that is out there. And that's my concern. I mean, every American knows that they're lying. So they know they're lying. We know they're lying, and they know that we know that they're lying, but they continue to lie. And that's my concern. We're starting to see all of these just ridiculous decisions, and the fact that they're not thinking critically about what's taking place or being efficient. So you take some farmer who has very little tools and is a long way away from the country. It's amazing how efficient and what they can do with the little resources that they have. And then those that have all of these resources at their disposal, they don't appreciate they don't appreciate the need for efficiency, because they feel like, hey, I've just got all these resources, I can go out and do with it what I want to do. And that's that arrogance and that pride that leads to the fall. And that's why these major empires throughout history have gone down. They're, weak men, which don't tell the truth. They don't take the time to challenge those around them. They can't take constructive criticism because they're not strong enough to do it, because they need to be fed, flattery all the time to make themselves feel good, to feed their God complex. And that is the weakest position that any of us could ever find ourselves in. And unfortunately, that lack of honesty and that need for power and instant gratification in our leaders is put all of us in a very precarious position right now.
Yeah. Obviously there's war drums on the horizon. People are worried about it. I'm worried about it. And it's for reasons that nobody can explain, and that bothers me. Right. Mm-hmm. So I think war is a very serious thing. I love the proposals, and I support them entirely, that says, hey, if we want to go to war, Congress has to vote on it. Right. And then when they do that, the rest of the proposal is, if they're of an age, they serve. If they have children, they serve in front lines. None of that rear echelon stuff. Right. Front up. Because that just means you believe in it. Right. It's that important. Mm-hmm. You vote for it and you put your life on the line. Then I'd go, okay, it might be important. Right. Mm-hmm. If the consequences fall to somebody else, I don't believe what they're saying, mm-hmm. just how I'm built. So nobody can explain, Paul. I've stumped a lot of people. This is my big stumper. Like, why are we in Syria? We're still there, The closest we got to an answer was Trump when he blurted out, I think the thing he wasn't supposed to say is, oh, we're there stealing their oil. I was like, whoa, you can't did you say that? Because that's what we're doing. But beyond that, like, what is why are we there?
Right.
What are we doing? What's the mission? What's success look like?
He's the only one that stated something. And one thing about Trump, he is not self-aware at all. And the one thing you can really count on him to do is if there's a thought that comes into his head, wherever he is, it's coming out. So,
Yeah.
so that's probably the most honest statement that we've seen. And I've never been able to figure out why we're in Syria or where we are at this point either.
Well, right. So, and nobody can explain what my compelling interest is in where Ukraine's ever morphing boundary lines, which have changed just constantly throughout history, why that's critically important to me or you or anybody here, that we would risk, a full-on nuclear conflagration. So I don't know. So, hey, I got a mystery chart for you. So we were looking at the S&P and it's going up, and I have people are like, oh, but this is crazy. It should be going down. I don't know what should is anymore, but what do you think this is a chart of here? It's an exponential function, obviously.
Well, my assumption would be in a couple of charts that I've looked at like that, I don't necessarily think it's a stock. It'd be our national debt. I don't know. I'm not sure what that would be. I can't see it quite clear enough to. Oh, that's the Venezuela stock market.
Yeah. It's just like skyrocketing, and of course Venezuela is falling apart during that period of time, and it's just gone even to more insane levels. If I pulled up a more current one. And if you had invested in the Venezuelan stock market back at the beginning, you would have made many hundreds of thousands of percent returns, right? And you would have lost ground compared to inflation. Still. Yeah. Right. So, but, you got to play the game. That's the thing that I also decry. And so thank you for doing what you do, because they've set the table and said, well, we're going to lie about inflation. We're going to create the conditions for a lot of it. Right. And then in order to just not get killed by it, you're going to have to play this game. Right. And then the game is rigged. And, it's one of these things, Paul, like trading is a zero-sum game. It is not possible for all the traders to come out ahead. Just isn't, So that's the condition. They've set the table and they've said rules for us that favor us. House rules are good. We pump the markets whenever we need to. We give ourselves first dib on that money because, we're important, right? It's like John Kerry. Well, it's important for me to fly around the world talking about climate change in my private jet, right? It's one of those rationale arguments. Like, it's important, And but then they set the whole thing up and say you have to play. Like, that's what I don't like, is you have to play the game. You have to.
Unfortunately, you do. And although, one of the things I like to point out is there are a lot of things to be concerned about right now. And I am concerned about those. And I pay attention and I'm aware and I build in strategy planning. And I've shared that, hey, we're 2 steps from the exit so we can bolt out the door really quickly when we need to. And that's that fine balance between playing the game by the rules that are forced upon you, because really you have to. And quite frankly, we don't know. I mean, for each of us, we can calculate percentage probabilities, and the economists and statisticians, they can do all that, and that's great. But the reality is, for us in our situation, it's a binary outcome. Either it happens and we get a deflationary event in our lifetime, or we get an inflationary. Now, my thesis is going to be at some point things are going to crack. We're going to get that deflationary spiral in the short run, and that may drive funds back into treasuries. But especially if the unit is an alternative and some of those dollars internationally come back, inflation over the long term, we get that breakout of inflation they can't get under control. And it depends on what the response is on the other side of a deflationary event. But the reality is we may not get that deflationary event in the short run. So you have to play that game by the rules that are forced upon you. And the interesting thing is, if you're a Venezuelan investor and you're in that country, you would have been better to own the U.S. stock market or some international stock market, because it would have retained its value better than what theirs did, even though it was going up a lot. So those are very important details to pay attention to, that we pay attention to. So from my standpoint, one scenario is, what if we don't get a deflationary pullback and we break out into that inflation side and our markets are sniffing that, okay, and they start running? Well, right now, the U.S. is outperforming everything else, but there are ways to compare performance return and that real return between U.S. markets and international markets. Right now, money's leaving international, it's leaving value, it's coming back here. But there's going to come a day in the future where exiting as the fire starts burning, may not necessarily be moving into treasuries. It may be moving into some other international index that is performing better and much more attractive than what the U.S. is. And it goes up, but may go up more and increase your purchasing power, where the U.S. indexes may go up in that hyperinflationary event and you're still losing that purchasing power. So there are ways, but you have to be nimble. You have to have tools that are going to give you the confidence to step in that direction. And you have to do it with fear and trembling, because the reality is perfection is not going to be discovered. And the thing about the bubble media that frustrates me the most is they're always dangling in front of you that lucky individual that got perfect and, perfection by putting all of their cards in NVIDIA as an example. I'm not saying do that. I'm just talking about an example. So, and we celebrate that. So it makes all of us think that we can do that. But the real investors understand, and the professionals, the Stanley Druckenmillers, the Warren Buffetts, the others, you're not going to find perfection, but you're going to work a strategy that's going to help you make consistent positive decisions over a long term. Because if we leave it up to our emotions, that's where we fail. And that's where my passive investing is so popular, because we don't have to think about it, but we're abdicating responsibility over to an arbitrary index. And now all of a sudden, by passive investing, we desperately hope that the Fed's going to bail us out, because they're the one thing that's been able to bail it out so far. So yeah, I mean, I think, I don't know when this upends, but I do believe it's a lot closer than most people realize. And I can't help but think this, and I'm probably a fool for stating this out loud right now, but with some of the things that I'm seeing take place under the surface, I was shocked when you were warning people about what was taking place with COVID breaking out, what ended up becoming COVID, and you're sharing information. I'm looking at the information you're sharing. I'm watching the markets, and I'm like, the markets are ignoring this. Like, they were near escape velocity, blow off top run, and they ran all the way into the lockdowns, and boom, then it reversed. So I don't understand how Wall Street and all the information we look like and the plan that was behind it didn't start positioning themselves when the data started coming out, when you were warning people. So I'm concerned that we're going to get another event like this, where the markets are going to be running and tempting people to be sucked into them, tempting them to be complacent, and then all of a sudden they reverse really quickly, and most people don't have a plan to exit, so they're stuck there like deer in the headlights. Or they exited a long time ago and they can't take the pain of watching the market run, and they make an emotional decision to get in at the absolute worst time, because Murphy's Law, that's usually the way it works.
You know what? I like all that, but I'm a big fan of watch what people do, not what they say.
Oh, yes, absolutely.
This is an interesting chart that just popped up on Bloomberg, where they're looking at gold holdings and official reserve assets. This starts back in the 1945 is where this chart starts, way back here. And you see this first run here, post-World War II, coming up in through 1960, about 1963 or so. That's mirrored only by this run right here, which starts about 2009. So the great financial crisis happens, Paul, and the world's central banks took one look at that. They're telling us it's all fine. It's been papered over. We had the TARP. We had the TALF. We have all these special programs. Don't worry your pretty little head. Everything's going to be fine. But under the covers, and this isn't dollars, this is in millions of fine troy ounces, right? So this is just telling us what they're holding in bars, right?
Yes.
So take the relative value out. Well, this is a very clear sign to me. That's what they're doing. I have it on good authority that a lot of very wealthy families and individuals have started to move heavily into precious metals as well. That we may be going from an era where it's, hey, I want to make good return. So it's going from a wealth accumulation phase, like how can we make more, to a wealth preservation phase, which is like, how can we hold on to what we got, right? That's a big shift. It happens from time to time. But everything they're doing out there on the CNBC, MSNBC, Wall Street Journal sort of retail level is they're just trying to convince us, stay in the game. We need you fully invested. It's that scene, Wolf of Wall Street, right? No, our job is to keep them fully invested, And right. So there's always that next thing. You know, that's what Matthew McConaughey's character is saying. He's like, no, you got to sell them. There's this next thing. It's really important. They can't miss out, right? So I'm watching that, and I got to tell you, this AI stuff has all the same flavor to me. And again, no specific recommendations for or against, but I'm looking at it, just the vibe on it has the same feel. I've been here before, Paul. It's eyeballs. You don't understand. They're not making any more land. It's like it's got all the rationales, right?
Yeah.
That accompany something. But I'm always wondering who's pushing that narrative, right? They got a good budget. Like, who's doing that? And it just has a feel. It doesn't feel organic to me. It feels a little salesy. But
it does, and that's my concern. You know, and the reality is AI, like the internet back in the late 1990s, once it became common knowledge, hey, this is going to change. Most people didn't know what to do with it, right? They didn't know how to monetize it. But people were, but now they saw where we were going, and they assumed it happened quicker. So they bought Amazon, they bought all of these stocks at the top of that bubble, and it was 13, 14 years, 12 years before they got back to that level. And they've been great investments since then if you hold on to it from a long-term standpoint. But few investors, you know, most people accumulate the largest amount of their resources right before they have the ability to retire. And then they feel behind, or they, for whatever reason, they feel like they have too large of a margin for error, and they get caught up in that game. And then they get hit really hard, potentially, right before they go into retirement. And retirement becomes a completely different picture than what they expected it being. So when something sounds too good to be true from a long-term standpoint, it typically is. And the story here, I think it's going to make a big difference from a long-term standpoint. But when you really critically think about it, well, okay, if AI, if we don't have anybody serving us when we go to McDonald's, or we don't have a tax preparer anymore, or we don't need attorneys anymore, think about the trickle that has throughout the economy, because it is deflationary, because people are going to lose jobs. If AI replaces all those jobs, there's less people to work, and people are already struggling right now. So what's that picture going to look like in the future? And yeah, maybe you have 6 companies that control everything and that's it. Well, that's a miserable world to live in. And at some point, there's nobody left to buy the stocks on those individual companies that are out there. So, you know, maybe they're in control. So when you think about that from a long-term standpoint, it just doesn't make sense to have this much panic and media mania in the long term. But I mean, you know, people get excited when the lottery is over $1 billion, and $1 million for most people is going to make a major difference in their life, but it gets them dreaming about what they could do. And unfortunately, for most people, the lottery mentality is not the way to be successful in the long term, and hope is not an investment strategy. You know, rolling up our sleeves, discipline, and working a plan and adapting in that plan is how we're successful from a long-term standpoint. And today we have to think about many more things and many more risks than what we have in the past, because we're at a period of time where we have weak leaders, and weak leaders bring about hard times, and those hard times are what we must navigate through. But here's the great thing. What's the Chinese symbol for chaos is both opportunity and danger. So I think that's correct. I may be wrong on that. Crisis is opportunity and danger. Yeah. So in the midst of that crisis, for those who are courageous enough and willing enough and have thought through and have a plan, it'll be the opportunity of a lifetime. But for those who are putting their hope and faith in our leaders to get us through this, well, they're probably going to be greatly disappointed.
Well, I'm hedging my bets. I know you are too. So can I tell you about so this is my joy of late. I'm sitting at my desk working. It's 9:30 because that's just my life, and I get a call, and it's from Evie, and she's out in the yard. She said, "You got to come out and see this." So I go outside, and it was just nothing but lightning bugs, right? Fireflies, just. I don't know how many thousands, but at any one time there was over, 1 or 2 dozen just lighting up everywhere, right? And it wasn't like that when we got here. And so we're thinking, because we've been doing everything we can to increase the abundance. I'm terrified by the loss of insects, but to see the fireflies coming back was a really hopeful thing, But that's because, Paul, we're living in a place where this is what we're doing. Are plants green? If they're not green, what do they need? How can we help? How can we use our brains to, we're bringing water and food, and we're using and creating abundance because that's part of my strategy here. I don't know. I'm worried when you say hard times, it's kind of a euphemism. Weak men create hard times. I'm worried they're going to break our supply chains and there isn't going to be food in the store. Maybe a crazy concern, but it was a lot crazier 5-10 years ago than it is today. A lot of people are starting to think that way, and I think they should.
I think they should too.
Yeah,
and there's a couple of ways to think about that as well. I believe everybody should have a minimum of 3 months worth of the food that they eat on a regular basis in their pantry at home, and then rotate those shelves. And if you think about it, it protects you against supply chain disruptions.
Mm-hmm.
It's protects you against short-term events. But as much as food inflation has been over the past 3 years, that's a built-in storage of savings that you can use on a regular basis if you had to use it. And I think people are starting to realize in a little bit larger and mass scale that is a prudent thing to do. It can be done simply and easily. And for people who don't have the resources, they can average into that over time, double for a while, make a little sacrifice here, make a little bit sacrifice there. And it just provides a lot more resiliency than what you otherwise would have, because, they made fun of people for having too much toilet paper before the COVID shutdowns happened. And then all of a sudden, everybody wanted to be friends with the person that had too much toilet paper. So,
Yeah.
There will be a day in the future where you'll be glad that you had those stores there. And what you're doing is the same thing that I'm doing. And not only that, Chris, is it not the most enjoyable thing to have your hands in the soil and to be out there looking at those lightning bugs and just enjoying the creation that God gave us and knowing that we're good stewards of it?
Mm-hmm. It's so important. It's so important because I'm not interested in surviving. I mean, I sort of am, but I'd rather thrive. And so,
Yeah.
So I'm really, I got to be honest. I went down this path because there was a stick at my back, and now I see the carrot in front of it. Like I would run towards this lifestyle because it works for me. Maybe not for everybody, but I really enjoy. Like last night, it almost sounded like a complaint. Evie said, I said, "Oh man, I'm so sore." She goes, "Oh, I'm so sorry." I'm like, "No, this is a good sore." So last night, Norm and I, we turned a 31-inch log into 160 feet of 2x6s.
Did you really?
Mm-hmm. We got 16 10-footers out of that, and so those are going up into concrete forms, and we'll use them for rafters and stuff on a side shed and whatnot. But it's just, to me, pure magic is going from a log to this pile of lumber. I just it's magic.
That is great.
Yeah.
I'm impressed by that. My family had a lumber supply when I was growing up as a kid, but I've not seen anything like that done in years. And that's something that I'm desiring to add to my hobby list in the future. So that's exciting.
You definitely should. You will love it. It's a lot of fun. So I would really encourage everybody. Obviously, work with Paul and his team to get the plan. You need to have a plan. You really got to have a plan for this environment. But, if you work with Paul and his team, you'll be talking with people who are going to be saying things like, yeah, you should plant a garden and maybe you should consider gold and silver. And if you're concerned about the petrodollar, so are we. So you deserve to have those conversations with people who speak the same language as you. I would highly recommend it. The feedback has been just tremendous. And yeah.
So I
wonderful
appreciate
thing you're doing.
I've had a blast. And I do want to say one thing. I've had a couple of people say, you talk about the planning, but I've done a lot of planning. Well, yeah, people have done a lot of planning, but the way that we look at the planning is more of a stress test. And time again, the people that have tolerated just out of kindness, okay, I want to know what your recommendation is, so I'm going to go through the plan, have been absolutely shocked. And I've had comment after comment, I'm really glad we did this. Or they'd ask me a question. I'd say, let's do some scenario analysis. Here's option A, here's option B. This is the most shrewd path. This is the most prudent path. Let's see, at least from back testing you against history, what that outcome looks like. So I love it. I know it's kind of geeky, but it really gets us to the point where I'm able to show people, to quantify for them option A versus option B. And then more than anything, where it gets really exciting, Chris, is there's a lot of people that are wanting to do some of these things. And when we get down to that final plan and they get put in place, I'm like, okay, you have X amount of resources over here that you can free up. If now that we've got this plan in place to where you can go out and apply it in these areas that can make you more resilient. So I have a blast doing it, and then of course, I never make people go through the planning meeting and the recommendation together because I'm way too geeky to make them go through both of those. So that way it's not information overload. It's, hey, you got this in place, and then we do the recommendation meeting, and it's been an honor. I got to tell you something. The people that I'm meeting and the people that are listening to you, they're smart, they're intelligent, they care. They're in every section of society. Every single person that I have met has been somebody that I would love to be in a community with and participate in a rebuilding if things were come apart, because they're genuine and they have the courage to look at the world for the potential that is there. And they may not necessarily know what to do with it, but they're just great American, salt of the earth, care about this country people. So it's been quite the honor.
Oh, I'm so glad to hear that. I'm not surprised. We've got some great people in our tribe, and a lot of good
really
people
do.
out there. A lot of good people, right? So, and we're going to need all of us, and to be well resourced, because there will be a rebuilding. I know everybody's sort of focusing on the funnel right now, which might not be a lot of fun, probably won't be, but there's an after to that story.
Mm-hmm.
And so the point is to make sure you're positioned for that, really, as best you can. So,
And that's our job. Our job is to help people build resiliency and then operate a strategy that's not going to be perfect. Yes, we strive for perfection, but perfection is not going to be achieved. But if you don't strive for perfection, you're not going to reach the maximum limits of as close as you can get there. But so the point being is having a plan in place to help them navigate and say, hey, I can't tell you the people that have stated that, hey, I'm sleeping a little bit better at night because they've asked me every question they could possibly think of. Some I don't have the answers to. Some we have to go do some research. But I'm like, here's how we will deal with these events if they take place. And these are the shifts that seem to be the most appropriate at this time. But here's how we'll know how to further clarify that focus if we have to adapt a little bit more. And that gives me peace knowing that I can do everything that I can do for those that we have the opportunity to serve to get them through whatever the future unfolds, because we're truly in uncharted territory, from a valuations perspective, the market, the global stage. We've been here before it passed in history, but for this generation right now, we're in uncharted territory.
indeed we are, but people feel it. I feel it. You feel it. One of my more popular pieces a while back was just asking the simple question: have you been waking up at 3:30 in the morning? And all these people are like, yes, I have been, and it's just something's waking us up, so getting the sense that there's something out there stalking the land and all that. So let's hope it doesn't come to pass, but we're going to have to be as prepared as we can be, I think. And that's been my work in the world, Paul. I'm just here. Here's some data. Do with it what you will, but I'm just stunned at how rare that is.
Yeah.
There should be more people caring about what's, can you really see what's there before us,
Right.
Right. And yeah, so we're sleepwalking straight into an energy crisis, and this country's going to be magnificent when we get there. A financial crisis, a monetary crisis, both will be magnificent when we get there. And probably an overall crisis of leadership that we're going to have to confront here sooner than later. So,
a lot of things to navigate, that's for sure.
Absolutely. All right. Well, thanks so much for your time today. Again, if you want to talk to Paul and his amazing team, go to peakfinancialinvesting.com, fill out a simple form, and somebody will get back to you post haste. So, thanks again, Paul.
An honor, Chris. Good to see you again. Thanks for everything that you do for our country and those that are listening to you and will find you in the future.
Well, thank you, and have a great weekend.
You too.
Hello, Chris Martinson. I'm the CEO of Peak Prosperity and also Peak Financial Investing. And after watching that, you're probably wondering, well, what do I do with my money? Look, you both deserve and need somebody who can talk to you about what's really going on in this world, understand the situation as it is, not be steering you towards certain things that don't make sense for you or just keep you in a game that's already ended. Look, if you want to talk to somebody about the petrodollar declining or what is happening with gold or which sectors are actually the best ones to be in, given what the Federal Reserve is up to or the federal government, you deserve to talk to somebody who can answer those and has a few gray hairs and has been there through some of the economic cycles because, hey, we're in another economic cycle, so it's good to have that experience. Fortunately, at Peak Financial Investing, what we do is we go out and we scour and we look for the very best firms out there who satisfy one thing above all else. They've got great experience coupled to great customer service. So if you want to come by peakfinancialinvesting.com, there's a very simple form you can fill out, just a few fields. You hit send. What happens is an email gets triggered out. It goes to an endorsed firm of ours. You will get an email back. You can then set up a phone call for a 30 to 45-minute free, no obligation, no pressure call to find out if this firm is a good fit for you and to find out if you're a good fit for the firm. It has to go both ways. And if all that matches up, this will be one of the best things that could happen to you this year. So please come by peakfinancialinvesting.com. Very simple process. We would love to help you if we can. Thanks very much.